Let's talk the banks. The XLF hitting a new record high today. Steph, you got a new move in the space.
I do. At Capital One, I've actually never owned this stock before, but it's a couple of things. It's a play on the consumer, which I am in the camp that the consumer is in fairly healthy shape, given labor market, they have jobs, wages, and fairly good credit. But more importantly, it's the Discover deal that they completed in July. It's going to be massively accretive. I think this is a case where you have 1 + 1 = 3. Synergies of $2.5 billion leads to double-digit earnings growth, $26 a share in earnings power by 2027. More importantly, I think it gets a re-rating because they just bought the payments network with scale, and you need scale in the payments business. American Express has it, now Capital One has it. And so that, I think, is going to be very positive. And even if we do stumble a little bit with consumer or the economy, I think we fall back on the synergies of Discover. They also have excess capital, so a lot of excess capital. And so I think you're going to see buybacks, increases of dividends, and that sort of thing. So 14 times earnings. The historical average has been anywhere from 4 to 22 times, so somewhere in the middle. It's had a nice run year to date, but I still think there's more to go.
All right, we're going to continue talking about banks. We'll talk about Goldman a bit. Kevin, you own this one. Goldman yesterday said it's going to invest as much as $1 billion in T. Rowe Price to team up with the asset manager to sell private market products to retail investors. Your thoughts on what this could potentially mean for Goldman and just the idea of selling these private market products to retail investors?
Well, I think I'll pass on giving you my opinion on selling it to private investors because I think there's so many layers of fees that I doubt it's ultimately going to benefit the 401k participant. But that being said, I think it's a fantastic move for Goldman. Goldman and David Solomon were criticized in the past for going into the retail space. I think this move is fantastic. They pay $1 billion to get a 3.5% stake of T. Rowe Price, which is a company that certainly isn't the household name that it used to be. And this gives Goldman the ability not just to put their spin on things within the 401k market, but also to get those private investments into the 401k space, which is massive.
All right, Goldman pulling back about 1.5% right now.